Good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the 6th of November, Wednesday, 2024. And what a day. Look at the stock market gains. I mean, insane. 1,500 points in the Dow. So what we now can do is look at some of these markets, and we'll go through the charts and say that the reactions that we had, those low points going into the election, should not be violated, in my opinion, before year end. We also have seasonals that kick in and start buying these markets and say into the first week of December from this point in a number of the indices, they typically go up very strong, high percentage of that happening. In some years, 15 out of 16 years. Others, we've got one that's 14 out of 16 years. So it's interesting as to where you're at on that. How did the market review all this? Well, we wake up in the morning and we see that the pollsters had everything wrong. I think that's how you have to approach it. The U.S. public said enough. We have too much inflation still, even though it's down from the pandemic. It's still too high, and they didn't see that is going the way that they want. Too much regulation, too much of this, too much of that, and all of a sudden the Democrats out the door in the Senate. Looks like now it's going to be controlled by the Republicans, not by a real lot, but controls there. The presidency, certainly, you saw Ms. Harris graciously bow out. President Trump's going to come in, and he's going to do things quicker than you think. And the reason is time's against him. He can't run again. He's got 4 years to get his policies through. He's got 2 wars that he's looking at in a major way. If I'm Ukraine, I'm very concerned all of a sudden because he's going to, and he being our president, is going to look for a solution. And I think we all know what it is. How do you let Russia take the land that they've captured? This is what I think he's headed to so far. Stop, no more aggression, end of the game, if Russia will do that. Now, if Russia plays real hardball, they got a problem, because what the U.S. really didn't do is they didn't go after Russian oil. They could. If I'm Iran, I'm going, this is going from bad to worse for me. You've really got now a warmonger in President Trump that understands. I don't think he'd have allowed Iran to regroup financially with all those oil exports that the Biden administration did. So I see another problem there that you've got to look at. I think that in the U.S. you can look for a complete revision as to the oil policy. Under Biden, you were shutting down. No pipelines could take place, as you know. Under Biden, you were telling people, even natural gas, you can't produce that much, can't do this. I think you're going to see the exact opposite, in fact, out of the Trump administration for the good of American, if you will, security. It's going to be looking at us first and then looking across the ponds, looking everywhere else. If I'm Mexico and you think you're going to be able to play that game of foreign money building factories to avoid the tariffs, and then they'll come in through Mexico on a case by case, they're going to be looked at, and that's not going to happen. The border, that's going to change rather dramatically, and unfortunately that creates inflation because you're going to lose a lot of those people that could come in. If you're an immigrant in the United States with a police record, will Trump be able to find you? That becomes the question. Will he have the power to deport you? I don't know the answer to all that, but those are the things that we're looking at, and I'm just touching the very tip of the iceberg. The one thing I believe is he's going to move quickly, the president-elect. As soon as he gets in, time is his enemy. He's not getting any younger. He's got a legacy he wants to leave. As for those legal cases against him in federal courts, out the door. Now, I don't know about civil lawsuits. I'm not an attorney. But anything he can control federally, that includes the Secretary General, all these things you can imagine, all the things he can do in the court system, they're going to be gone. Can he give pardons to the people that were sentenced for the January 6th? He might. It won't be popular, so I don't think he'll do that right away. And Israel probably comes to help the president so that they're on the right side with him and they're all in the same package. You already saw that the defense minister is out. The timing of it is no surprise. The timing of it coincides with President Trump going back in office, and I think that's the important thing. He's going to approach things businesslike. He's going to say in Ukraine, this is costing too much money. We can't keep doing this forever. Unfortunately, it's the wrong thing from a certain point of view, in my opinion, because if Russia gets ambitious, we're all going to be at a problem with them. Maybe Russia's had enough of it too. They were supposed to overtake Ukraine lickety-split. That didn't happen. In all of NATO, that'll be a whole different enemy for them. So, is the timing right? It probably is to get something done. It'll be unpopular at first. I do pray that our President-elect Trump does involve NATO in decisions. Don't go making them on your own and shove it down their throats. That doesn't work well. But going back to the financial markets, we saw interest rates surge today. Okay, but how high do they have to go before they're overdone? My guess is in the 10-year, you closed around 442.5, 443. Could you go up another half a point? Maybe. Is there a reason for it? No. Do I think any of this stops the Fed tomorrow from going with a quarter-point cut? I do not. Bank of England, they've got to make a decision. I believe they'll go the quarter point. And that leads us tomorrow to what we've got. We've got the Bank of England's decision. If you take a look at the Federal Reserve down here, you're going to get their decision at 1, followed by the press conference. Jobless claims come out at 7:30. They're looking for a small increase of about 4,000 on the headline. Third quarter preliminary non-farm productivity data will come out, and that's at 7:30. Wholesale inventories and sales data gets updated at 9, and we'll get natural gas storage numbers. Now, did the markets get overdone today is going to be the big question that traders want to deal with. And it depends what you call overdone. On a one-day basis, probably. But overall, really overdone? Well, Tesla was up $37, but I was surprised it was only up that much. Why? Because if the Trump administration decides to do away with that $7,500 credit for cars, this is the companies that's best situated. In addition, I think that the payback for Musk backing Trump is definitely driverless cars. And I think that you'll look at the production of Tesla eventually approaching where nearly half their production is going to go to that. So that's a different way to look at it. Gold, how could gold stay up as long as it did was the big question, and I'm a bull on gold. The soaring dollar, especially today, the soaring interest rates today, the soaring stock market, you sell reserves to put yourself at risk. Now, do I think you buy this big of a risk today? No, but do I think ultimately by the end of the year and a number of these will be higher? Yes. So it's a question of how to come into some of these markets. When we look at RSP, look at the gap that this election caused. This isn't fundamentals. This is the gap that the election. Could you call it fundamentals? Well, yeah, I guess you could, because it is a massive change of leadership. It's going to be a massive way to look different. You're opening the door up for mergers, acquisitions, less regulation. I mean, these are everything that President Trump ran on and what got him reelected. So the market's looking at that, and you're up to new all-time highs. When you look at the market, you can see you had a lower low, higher high. And if I remove all this, you can't tell me, well, here was the bull picture. There was no bull picture. The market had stopped declining, and I mentioned that last night. I said, you've broken the downtrend. You've now got a higher high and a lower low pattern. It's exactly what you had. You broke the pattern of lower highs, lower lows. Okay. Then you had this. When we take a look, the market was under the 18-day average. Today's your gap away with all that. Okay. You've left a group of people stranded down here. Gaps often get filled. Do I have to see the market go back down there? No. But if you take a look at this chart, show me other gaps. So gaps have a way of getting filled. That's the point that I'm making. And the question is, will it happen in short order? That's what I'm looking for to see. When I come to RSP, why do I think the market's going to run out of steam here? Because my old friend, the upper Bollinger Band, you went to it and you stopped right on it. You can't deny that it stopped right there. That's what it did. The second thing, the market's momentum kicking up. You can go higher, but you're going to quickly be overbought. It may be as early as tomorrow, by the way, in the market. And I wouldn't be surprised if we want to get a retracement of sorts in the market. Now, to get back to the 18-day average, it looks far in the chart, but on $170, $183 stock for all purposes, we're talking, can you get back into the mid-179s? I don't know that that's going to be that difficult. That's the point that I'm making. When we go to Qualcomm, you tell me where the market stopped on the bounce today. Big bounce. You went right to the Bollinger Band, stopped there. You went to the 100-day average. This is where the pros that took the risk took some money off the table. Would I be surprised to see the market back off from here? No. Is this a buy condition? It is not. Would I tell you to buy on the first move over a 100-day average at 200 in the Bollinger Band? No. That doesn't mean it won't go higher, but it's not something I'd have you follow. In CrowdStrike, well, it went with everything else today, and it's back over the Bollinger Band, and it doesn't do well on that first move, but this chart picture is a bit different now. When it wasn't holding, you hadn't narrowed the Bollinger Bands in the way that you have right there. You take a look. Much wider, much wider. So this is a different story. And if you'll recall, I said, I think we're going to get, last night, a pattern to start getting long from in this. The question was, would you go even further down if it had been a Harris win? Well, it wasn't a Harris win, and that answered it, and you gapped away because of it. A lot of people have money on the sideline. They're just buying. You know that you only stay over Bollinger Bands 5% of the time. I'll let them do that buying. I wouldn't have you do it. Uranium. So we got a bit of a bump, and you should. I think it'll be treated completely different for all these AI centers in the energy than how it was being treated under the Biden-Harris time. So that market got a bit of a bid. It didn't get itself out of problem. It's still fighting under the 18-day average of closes. But like we just saw in the other markets, this pattern of lower highs, lower lows was violated today. That's not necessarily a buy signal, but it's a signal not to be short any longer. When I look at KWEB for China, I'd be nervous. I mean, China's on the radar scope here, okay? What do? Do they finally come back to the table realizing what they went through before isn't in their best interest? I don't know. But if they think they're going to dump anything in America, you've got the cowboy back in town and you're not about to. So what happens? Well, it's not all good because it's going to be tit for tat, all right? China's a very large economy. They need not buy us stuff. You want proof of that? Where's the soybean purchases for the American farmer? They went to Brazil. Brazil's planning like no tomorrow because they've got a willing buyer sitting right there. China buys from us when they can't get from them. That's just one product. So be aware as to what this is. Can we find a way that everybody gets together in the 4-year period of Trump? That will be the real question, and that ideally is the goal. Toll Brothers, all right, it came back up today in front of the Fed meeting tomorrow, but I don't see a reason that I'd be rushing in to buy any builders just yet. Did you look at today at the mortgage market indices? 18.5% decline in refi, down 5% in new home purchases. No. You're going to see interest rates. They come out every Thursday. They're going to be one of the highest numbers we've recently seen. It's not yet the time. That doesn't mean you can't get bounces within here, but I don't see it just yet. In the XHB, you're not bearish, but I think you'll have resistance at the 18-day average. All right, why am I not bearish? Because the swing line's up. Higher lows, higher highs, but when you're under that number, I can't get excited. Close over the 18-day average, and I'll start changing my tune. When we look at the financial services, well, how can't you be bullish this? Interest rates are probably going even higher. This benefits the loan business. In addition, business is going to ideally expand with lower taxes, all kinds of breaks coming in through here. This market's an automatic winner under Trump, and that's what I think the market just told you. The industrial sector is the same thing. So we've had this correction that has come down. I think you now will look back and say you're probably not going under that for quite a while at this point in time. On the energy sector, it's the same type of thing. You'd been, let me take today off the market, you were in all the resistance. You did have the swing line up, and you were fighting at the 18-day average. I guess you could say you closed over it yesterday with the close of 90.17, and the risk if you wanted to be long was back under today's low on a chart. It was way more risk than that had the Harris camp won. All right, you could have been right back down there. The ideal thing was to sit back. I don't care if you're a position trader, that's one thing. You figured out what you wanted to own and you carried it through. But to just go in and say, oh, Trump's going to win and this is what I'm doing, well, that's why they have betting websites. You could have done that. One guy had to make about $30 million as I was tabbing up what he had bet on Trump win in gold. I'm going to repeat. Gold is down for all the reasons that I said at the beginning, the higher dollar and so on. But inflation isn't going to go away under the Trump administration. If anything, it's probably going to accelerate. And the goal for them is to find a way to get growth to overcome that inflation. That's how I'm viewing it, at least on day one of the win from there. But I do understand you dump this, you buying the stocks and so on. I can see that. But when you go to the weekly chart, the chart doesn't look like this. It kept its bullish embedded reading. If it's up tomorrow, that's going to be a positive sign for it. If it's up, we'll see. Early evening trade has gold down about $6. In the silver market, more to the downside, but look where you stopped, right on the Bollinger Band. But so between here and the 100-day average is my first major level of support in the market. You pulled the plug on the chart, you lost all your bullishness way back over here when you took out this low. That ended the game, and you went immediately back to the 18-day average and fought there for 5 days, and today's doing it again. High rates, other parts. Copper the same. I was telling you, I think copper had no reason to be going up into this because we didn't hear anything out of China. And today's break in it, you were down 4%. Futures were down 20 cents a pound. So quite a break that market had. Interest rates, well, you can see what the market's saying. I mean, I realize the Fed is going to cut, and I'm in that camp that they're going to cut. Is it having an impact? No, not really, but it will over time. Because what's happening in term rates, and term rates are longer term rates that are pricing in this event, they will find a natural number that they're going to stop at, and then that falling of interest rates will cushion the economy as these rates, as this goes down and creates higher rates. That's a brake on the economy. Any way you want to look at it, higher interest rates are a form of a brake on an economy. Dollar index up to the Bollinger Band, just over it slightly by 8 cents today. We'll see if it can stay over it. It generally pulls back, but the first real big gain, you did this before once. You're not embedded. I can understand if you were embedded to get a picture that carries even higher. Not quite there at this point in time, and that means the flip-flop in the euro is you're coming down, and you can see how that's done, and I think it's probably going to be a little too cheap. Today I was hearing already stories. We're going back to parity. Okay, you know, at the bottom everybody gets more bearish, and I'm not a bull in the euro, so I'm just saying, but when you get this type of move, a one-day move like that, which is unusual on the chart, you've had them before. Take a look. You do get these. And am I bullish or bearish the euro? I think I've been clear to everybody. I'm bearish European currencies, period. All right, looking for them to come down, and I'm bullish the dollar, no question about that. And that's how things have worked out. Again, to keep up with everything that we do, there's a better way than just this. It's our free offers. All you do is go to the website, iraepstein.com. And on the website, what you're going to see is you're going to see a page when you go to free offers that looks this way on your computer. I'm just showing you what everything is. You just click the offers that you'd want, and from there it goes into a cart. At the bottom of the page, you put in your name, your email address, we'll get everything to you. See the charting software I've got? That's it. You hear what I say when I say I'm writing my clients and telling them this, this, and this, which I'm doing. Tomorrow I'm going to do, for the weekend, a special report again. So you're going to want to see that. What am I going to do it on? Well, it's pretty evident. It's going to be on the financial sector right away, and as to where this market might be, and my ideas as to where you want to be positioned maybe towards the end of the year, because now we're already into the post-election, and you start playing with that. So we'll talk about that a little bit. But you get all that, you go in, and away you go. You can also move your cursor, if you're watching this, up to the top. There'll be an icon up there if you're on a PC, and boom, give it a click, it'll take you right to that page. I'm Ira Epstein. Thanks for listening. Give us a thumbs up if you like what I've said here, and I'll talk to you all tomorrow.